Hi, my name is Alex Carlucci with Gustan Associates. Today I'm going to talk to you about should you pay your mortgage off faster? And I'm going to give you a good example, and the answer shortly is yes, if you can. I'm going to give you an example of, let's say your principal and interest part of your mortgage is $2,000 a month. If you pay an extra payment of that principal and interest per year, you'll knock 4.5 years off your mortgage. So that's going to save you paying 2,000 times 12, which is 24,000 times 4.5. It's about $52,000 a year, or sorry, $52,000 over the life of the loan. And so that's going to cost you about $9 grand to do that. So you're going to spend $9 grand, and you're going to save around 50 grand. So if you pay $2,000 extra per year, over 30 years, you're going to knock 4.5 years off, and they're going to save yourself $50,000 in payments. That is a huge savings, and the interest that you're saving is even greater. So if you look at the amortization schedule of a mortgage, if you pay those payments off, you're going to save yourself like $80,000 or $90,000 total, not just the payments but the interest too. So it's even better than it sounds like when you save the payments, the 4.5 years of payments. You actually reduce the amount of interest you pay over the life of the loan. So I 100% recommend you pay your mortgage off faster if you can. If you make 2 extra payments per year, you will knock 9 years off your mortgage and save at least $150,000 over the life of the loan, and you'll be done in 20 years. Now, somebody might say that's going to be tight on us, or should I invest it in the stock market and earn 10% a year? Well, let's talk about that. Let's say if you put $2,000 a year away into the stock market, let's say the stock market on average goes up 10%. After 30 years, you're going to be putting in a total of $60,000, and you're going to earn, it's kind of complicated, but say you're going to earn $4,000 a year average on that over 30, that's 120. You're going to save over 160 to 180 by paying your mortgage off faster. So I recommend you pay the mortgage off because of the interest you're paying and the interest that you save. It's not all about the interest rate that you're saving. It's a compounding factor on a mortgage. So I highly recommend you pay your mortgage off fast if you can. And you can treat it as a savings account if you need be, because if you keep your credit good and if you keep your job, you can always do a home equity loan or a second mortgage with us, and we'll get you your cash out if you need it, if you absolutely need it. So I highly recommend doing it. It's a great program for you. I always sit at my closing tables when I'm at a closing in my state. I always mention this because I think it's one way to beat the system. I want to explain to you a little bit about mortgage interest on a mortgage, because when you do a mortgage, in the beginning part of a mortgage, you're paying all interest, and at the end of the mortgage, you're paying all principal. So it's really helpful to get rid of that, because if you refinance after 5 years or sell after 5 years, you'll have a lot more equity if you make an extra couple payments too than you would have by waiting. So let's say if you get a 4.5% interest rate, you don't fully realize that rate until you do the full 30 years. So if you do the calculation and you buy a house and you pay your mortgage payment and then you sell it after 5 years, if you look at the real interest rate you paid because of the interest only and you're not knocking down that much principal, you'll see the interest rate is the real interest rate is really much higher. And it takes you to go all the way to the end of your mortgage payments to average out your interest rate. So I'm going to give you the best way I can describe it. If you bought a house, made 1 year payments, and then sold it, your real interest rate is probably somewhere at 16%, because you look at how much you paid and how much you owe still. You paid all interest. So your interest rate starts at like 16%, goes down to 15%, and it slowly goes down. And at the end of the mortgage, you're paying like 1% interest. So over the whole life of the loan, you'll average a 4.5. So it always helps to pay extra too for that reason, because you're not paying any principal in the beginning. And you'll find that if you go to sell your house in 3 or 4 years, you owe the same amount that when you bought it. So highly recommend you do the extra mortgage payment per year. 2 if you can, a half a month if you can per year. If you want to do it in monthly terms, that's a way to do it. Instead of making that full one-time payment, you can make it a little $200 extra a month payments, and you'll be happy in the long run. I'm an older man, I wish I would have saved better with my money, but this is good advice. Save money, put it away, because when you get older, you're gonna really want it. And going out to that restaurant, going out to that bar, going on that extra little trip, save your money. It is, the interest you compound and earn on it is astronomical. So thank you very much. I hope you like this video. Please share it. If you got any questions, please leave the questions below. We'll get back to you. Thank you.